Hello, ladies and gentlemen. Good morning to you all. We are so sorry for the delay during the live session today, as we had some technical issues, but lucky enough, we were able to sort things out. So I'm so sorry, everyone, and I hope we are good to go this morning. So let's quickly confirm that we are good to go. If you can see my screen and you can hear my voice clearly, type in hi in the comment section so that we can get this started. So I do want to see some feedbacks in the comment section, please. If you can see my screen and you can hear my voice clearly, type in hi in the comment section. All right, so I want to see some feedback, please. So what's happening in the comment section? Okay, all right. Good morning, Vivi. Thank you very much. And good morning, Vivi. Good morning, Karst. Good morning to you. Thank you very much. Foster Lim, good morning. Thank you. Mesad, good morning. Okay, star. All right. So I will call that your name, right? Thank you very, very much. So I will be taking this as a positive feedback that we are good to go this morning. So I'm so excited to welcome you to another promising session on the X-Trend Speed. Well, it's the first trading day of the week, and definitely what we do here in this community. This is the right time to choose random pairs, which definitely will be the pairs we are going to be monitoring throughout the course of the week. So if you have any pair commodity, cryptocurrency, whichever, any financial instrument you have there, this is the most appropriate time to throw it in the comment section, and be rest assured that I will be using this as a leverage for the pairs and instruments we are going to be monitoring for this week. Though I have some couple of pairs that we shall be looking at, but if you have, feel free to drop in the comment section. And for those who are joining us for the first time, you are welcome on board. I'm very glad that you are here with us for the first time. And what we simply do here on the X-Trend Speed Live is to gather here on a daily basis in anticipation of the New York session. So what we simply do here is to evaluate and review the financial market, look at price action, and use the current market structure to decide what our next line of action will be. Are we going to be buying, or are we going to be selling whatever instrument that we are working on? And after deciding this, we position ourselves in such a way that you can catch any trading opportunity during the New York session. It may look a little bit complicated at first, but I assure you that with time, when you continue to stay tuned with us, be with us, join us here on a daily basis, you will get to understand how this works, and in the long run, you will be able to use the information you have gathered here to make your independent decision when you're about to open a position. So once again, you are welcome, and let's dive into the current market structure. Well, as usual, the first thing we normally do in the morning is to go through the economic calendar, as we all know that we need some liquidity. Despite the technical parameters or technical structures we have identified here, we need some liquidity that will be driving price movement. And as a result of this, we need to understand the fundamental perspective of the financial market so that we can be able to position ourselves in such a way that we can catch any trading opportunity. Now, if you look at the economic calendar today, and based on the instrument that I have chosen for this week, we do not have any major event for today, though we have we have a series of event. This week is laced with some series of event, but for today we don't have any. So I will be diving right into the current structure as we monitor price action and decipher how the market has been responding to this current market structure. So the first commodity we are going to be looking at this morning is the US oil, and on the US oil, it was quite a profitable week for us last week, as we had some opportunities, though we had some buy positions and some selling opportunities as well. But we are going to be taking a fresh new look at the market today, and let's quickly run through the daily time frame where we want to be seeing things from an holistic point of view. Now, on the daily time frame here, well, the first thing you would have observed, we did observe last week, is the fact that price action has been bearish in the throughout the second half of last year, and going into this year, I think in the last 4 months, we saw the situation here where price action has been trapped between the $83 level and the $70 area, which has lasted about 4 to 5 months. And this further emphasizes the indecision in this current market, as buyers are struggling to get out of the structure. Sellers continue to negate all attempt by the buyers to break out of the structure just within the $83 and the $80 area. Now, if you look at the structure critically well and look at what has been happening here since the month of December, after which price tested the lowest point it has ever been in the last 1 year, that is the $70 area, what we noticed was that we started seeing some higher low, which shows some struggle from the buyers to get out of the structure. So we have a bullish trend line here, which appears to be guiding that bullish momentum in this time. Now, in addition to that structure here is the $76 area, which we also identified last week, and it has been a yardstick for buying opportunity at any point in time here. And in the last couple of weeks, we have been using the $76 level as a yardstick for trading activity. And what do I mean by that? The $76 level is going to be an area we want to be looking out for trading opportunity here. That is, if price action trades above the $76 level, we shall be looking out for buying opportunity. And if price action breaks down the $76 area, we shall be looking out for selling opportunities at this point. And if you look at what has been happening here since the end of last week's trading session, you can see that price action is currently trading around the $76 area. And in fact, in the last couple of hours, we saw that price action has dropped a little bit down into below the $76 level. So what we are going to be doing right now is to scale down into a much more lower time frame, where we want to see how participants in this market has been reacting to the $76 level since the beginning of this week, to decide if we are going to be buying or selling the US oil for today. Now, with the information we have gathered here on the US oil, I will be scaling down into the lower time frame. Before we go into the lower time frame, I think there is a structure here on the 4 hours time frame which we need to also take into consideration while we plot and our plans for this week. Now, if you look at the 4 hours time frame here, it is quite obvious that price action has been caught within a channel since the beginning of the month of February. So we have the supply zone sitting at the $80 area, where we have been witnessing selling pressure throughout the month of February. Then we have a demand zone here at the $73.50 level. So it is quite obvious that price action has been trapped within this channel. Now, in addition to that structure is this bearish trend line after we connected a series of lower highs here. Since the beginning of the month of February, we have a trend line figured out here. But something interesting happened during the first day of this month, that is the month of March that we are in right now. We saw the final breakout retest of that trend line to give us a signal that the trend line may no longer be strong enough to continue to hold this bearish momentum. And you all know what we look out for whenever we do have a breakout of structure. We expect that one point in time price is likely going to come back, do a retest of that structure in anticipation of another wave of bullish momentum. Now, with the way things are right now, it appeared prior to the beginning of this week that price action came back into the structure, though we had a breakdown of that structure, and the bullish momentum we saw that began around the $75 level last week looks like it's this breakdown is turning out to be a false breakdown. Now, it depends on how price action reacts to the zone here, during the first couple of days of this week that will determine if this is actually a false breakdown, and this might likely be a trend continuation to the upside. So these are one of the things we are going to be looking at on a much more lower time frame so that we can understand what is really going on in this market. However, if it so happens that price action continues to the downside, selling pressure continues below the trend line we identified earlier, then it will be at this point that we would agree that sellers are still very strong in this market, and if a further breakdown of this bullish trend line happens, it will be a beautiful opportunity for us to join a decline to the downside. So these are the things we are going to be looking at. So with the information we have gathered here on the 4 hours time frame, let's scale right down into the 1 hour time frame and take a position for today. So right here on the 1 hour time frame, remember I told you on the daily time frame that the $76 level is going to be serving as the yardstick for trading activity for this week. Now look at what happened at the beginning of the week. We saw a huge bullish gap here. As you can see, price action closed at around the $76.70 level last week. Then the new week started at around the $77.20 area. So we had a bullish gap here, which reveals that there was some trading activity during the course of the weekend, which increased the price of the US oil. However, one thing that happened here since the beginning of this current week we are in is that price action appeared to have started the week on a bearish note. So this is the highest point price has ever been this week, the $77.20 area. So we already had a channel and during the first 8 trading hours of today. So we had a channel where price action was consolidating between the $77.20 area and the $76.50 level. And you all know what we look out for whenever we do have this kind of channel. We want to see price action do either a breakout or breakdown of that channel to give us an opportunity to trade the US oil. And what we saw during the early hours of today was the significant breakdown of the $76.50 level, which is the support line of that channel. And it's at this point I personally had my sell stop triggered here. And for those who are taking advantage of this opportunity, well done to you for being on standby to have caught that move. Now, the next thing we want to be doing, if you're already in the sell position, you want to be moving your stop loss accordingly to secure this current position as we wait out and see how price action is going to be playing out in the next couple of hours. So the most appropriate place if you are in this trade to move your stop loss is somewhere right above the $76 area here to secure this current position. Now, going into the New York session today, what is going to be our plans? And for those who had missed out on this opportunity right below the $76.50 area, let's see if the market is going to be presenting us with another opportunity to sell, or if we are going to actually buying, then we want to be on standby to catch that move. Now, with the situation of things right now, considering the breakdown of that support line for this week at the $76.50 level, you all know that from a technical standpoint, whenever we have a breakdown of a structure like this, we expect that one point in time price is likely going to come back, do a retest of structure to incite another wave of bearish momentum to the downside. So for us, we are already in this trade. We have moved our stop loss accordingly, so there is a likelihood that price might come back into the $76 level or the $76.50 area. But most importantly, what we want to be seeing around the zone to give us a confidence to join the sell momentum is to sight reversal patterns on our lower time frame around this area, after which we want to be joining that decline to the downside. Now, in as much as we continue to look out for selling opportunities here after the breakdown of the $76.50 level, we cannot ignore the possibilities of buyers at this particular point in time. Remember, I shared with you here on the 4 hours time frame where we saw the breakout of that trend line we identified here. Hold on a second, let me quickly run through that so that you can see what I'm talking about here. So this is the 4 hours time frame, and remember I told you how we identified this bearish trend line here, and we acknowledged the fact that the trend line was broken during the first day of this month. Hold on a second, please. Alright, I'm sorry for the breaking transmission. I had to sort out some personal issues, but I'm good to go now. So what I'm saying here is that we have identified this bearish trend line, and we acknowledge the fact that price action broke out of the trend line here at the beginning of this month, and then we said a retest of that structure is likely going to be inciting another wave of bullish momentum. And with the situation of things right now, we want to see price action climb back above the $76 level to further confirm that this is a reversal pattern that has retested the trend line that was broken at the beginning of the month. And if this happens like as expected, we might likely see a situation here where price action will transition into a double bottom structure, as if price is unable to break the previous low here at the $75 level, then the $77.20 area will be serving as the neckline of this reversal pattern, where a breakout of the neckline here will be a beautiful confirmation for a bullish momentum to the upside. So these are one of the things we are going to be looking at. The possibilities of buyers coming in this market is still very, very possible. So that is why for those who already sold at below the $76.50 level, kindly move your stop loss accordingly to secure your current position. So now when we scale back down into the 1 hour time frame, there is a structure here that we also need to take into consideration, and that is the $75 area. Look at what happened around the $75 area on Friday last week. We saw this multiple buy pressure which lasted about 10 good hours on this chart before that impulsive move to the upside came into this current structure. And if we consider the bullish gap here at the beginning of the week, it's more or less a sign that the major players who trade during the course of the weekend have a better perspective of where price is likely going to be going, and that might be bullish. Now, with a sharp rejection of that $75 area here in the last hour, it is very, very likely that a bullish momentum could trigger in from this current structure. So what this simply means is that if price action is unable to break the previous low here, which is situated at the $75 area, and price continues to trade above this level, then we might be anticipating a bullish momentum. And how do we want to take advantage of that bullish momentum? Are we going to wait for price action to break out of the $77.20 area to join that bullish momentum to the upside? If you look at the distance between where price is right now and that current point, it's over 180 pips. So are we going to miss out on the 180 pips before joining that bullish momentum if the bullish momentum finally happens? No. We can look around for structures that can guide us in such a way that we can be part of that bullish momentum even before the breakout of the $77.20 level happens. Now, what do we want to be looking forward to see to confirm that we can actually join a bullish momentum at this point? Now remember, we have this bearish trend line here, so I want to see price action climb above the bearish trend line. First of all, you remember we have a sell position. We might likely see selling pressure here, remember, to send price crashing to the downside. So we need to be very, very careful around this current structure. Now, if price action climbs above the trend line that was broken at the beginning of the month, and price action does a retest of that trend line where price action finds it difficult to break down that trend line, then it will be a sign that we are going to be going bullish. So I want to see something like buy pressure above the structure. In fact, if it could climb above the $76 area and we start seeing structures on our lower time frame that looks more like a trend continuation pattern, breakout retest on a much more lower time frame to the upside, then we want to be joining a rally to the upside. And if a further breakout of the $77.20 area happens, we want to be adding more position to our existing trade. So this is how we want to be buying the US oil for today. So let's wait out and see how price action will be reacting to the $75 area. So if price does not break below or find a new low from this current structure, we should be preparing to buy. And I have said that to buy the US oil, we want to see a break above of the trend line, buy pressure above the structure on our lower time frame, breakout retest for further confirmation, then we could join that rally to the upside, and a further breakdown of the $77.20 level will be welcoming another buy position. However, if price action breaks down the $75 area, retest of structure with selling pressure on our lower time frame, it will be a beautiful opportunity to add more sell position to our existing trade. So this is what we are going to be looking out for on the US oil. I hope you screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision. So for those who are sold below the $76.50 level, I have told you to secure your current position, and let's wait out and see how price action will be reacting to this important structure at the $75 area in order to know what our next line of action will be. So if you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair right now, and the next option we are going to be looking at as usual is the US tech. Now on the US tech here, we were quite profitable last week as we had some sell positions, and at the same time we had some buy positions as well. And going into the new week with a fresh new perspective, we want to be seeing what is really going on from an holistic point of view, which will make us be scaling up into the daily time frame. Now on the daily time frame, this is what we were able to identify. I think we've identified this for from some time now, and for the sake of those who are not part of our previous sessions, let's run through this so that you can also be on the same page with us. So during the course of last week's trading session, we realized that the market has been very bearish on the US tech, and to further emphasize the strength of the sellers in this market, we were able to connect the series of lower highs here, which resulted in that bearish trend line you can see on your screen right now. Now following the bearish momentum here, we saw that price continued to find lower highs, but something happened in the month of June as we saw price was unable to find lower lows, and this was as a result of the multiple rejection by the buyers here, as every attempt by the sellers to break down the $11,000 area was met with strong resistance from the buyers, and this lasted about 6 to 7 months before we finally saw this bullish momentum that began at the beginning of this year, as price action broke down that bearish trend line significantly to give us a sign that the bearish trend line is no longer strong enough to hold that bearish momentum anymore. So since the beginning of the year, we have been witnessing buy pressure, bullish momentum here as price action continued to break out structures like the $11,700, the $12,000 level, the $12,300 area, not until it got into the $12,900 area that we started seeing some selling pressure resume again in this market. So we were lucky enough to be part of all this bullish momentum since the beginning of the year, and to further emphasize the strength of the buyers since the beginning of this year, we connected a series of higher lows here, which gave us this bullish trend line. And since price action got into the 12,900 area, we had a very important structure where price action evolved into, and that is a strong reversal pattern in the form of a double top structure. And you all know what we look out for whenever we have a double top structure, which is a strong reversal pattern. We need a neckline that will be guiding our trading activity. So we had a neckline sitting at the 12,300, and what makes this neckline very interesting is the fact that it also shares a confluence with that bullish trend line. Now, if for this reversal pattern to be mature, we need price action to do a breakdown of that neckline, which actually happened and coincidentally shares a confluence with the bullish trend line, and it was at this point we realized the first breakdown of that bullish trend line since the beginning of this year, and that was a massive signal that we are likely going to be seeing a momentum shift. And in the last couple of weeks, we have seen a situation which further confirms this reversal pattern, as we saw price drop to the downside, did a retest of structure, and it appears price is likely going to be continuing to the downside. Now, with the situation of things right now, we are at a zone which falls around the $12,000 area, a very significant structure which has been a strong determinant of price action in the past. In fact, if we go to as far back as the month of November, you will see how this level also has been a strong selling niche in this market before the breakout of the structure happened at the beginning of the month of February. And with the situation of things right now, it appears price action is trading below the $12,000 area, an area which is more prominent for sellers in this particular market. So what we are going to be looking at this point is, as long as price remain below the $12,000 level, which I said is a strong selling niche in this market, we are going to be looking out for selling opportunities. But if buy pressure resumes just like it has been rejecting this area since last week, price action climbs above the $12,000 area, we might likely be looking out for buying opportunities here if we start seeing buy pressure resume above the $12,000 level. So in order to have a better perspective into what is really going on here, so that we can make a decision for today, I want us to scale down to a much more lower time frame, like the 1 hour time frame, and let's see how participant in this market has been reacting to the current structure at around the $12,000 level since the beginning of this week. Now, when we scale down to a much more lower time frame, like the 1 hour time frame, which I stated earlier, we begin to see things more clearly, as we shall be using what the current price action is saying there to decide what our next line of action will be. I think I have a structure I would like to share with you on the 4 hours time frame, which will make things a little bit easy for the eyes to understand what we are talking about here. So on the 4 hours time frame, this is a structure I was able to identify on the 4 hours time frame, which I want us to take a quick technical dissection of it before scaling to a much more lower time frame. Now, if you look at what has been happening on this chart since the beginning of the month of February, you will see that price action has been bearish, and this is very evident if we connect the series of lower highs here. You can see the bearish trend line on your screen, and in fact I have a couple of trend line here to further emphasize this. We have the major one here, which is the thick one on your screen, and then you have the temporary one here, which is a much more lighter one to the thick one I highlighted earlier. Now, despite the fact that we have been seeing some bearish lower lows here, lower highs rather, it appears price action is yet to find a lower low. And one thing about it is that look at the 11,800 area. This level has been a strong buying niche throughout the month of February, as every attempt by the sellers to break down the structure at every point in time, buyers came in right time to reject all the selling pressure in this market. And this even continued into the later part of last week, as we also saw sharp rejection of the $11,800 level. Now, with the situation of things right now, the only thing that will make us sell the US tech is to see price action take out the strong demand zone, which has been holding buy pressure for the last 5 weeks in this market. We want to see a significant breakdown of that structure for us to be sure that we are going to be having a selling opportunity. Now, what we want to be seeing is something like this, like an engulfing candle breaking down the $11,800 level, taking out all the buy positions here, and immediately we scale down to our lower time frame, we want to be seeing something like a retest of structure selling pressure below that level to add more position to our existing trade. So we could have a sell stop order just right below the 11,800 to trigger the sell position there. And if price action does come back to do a retest of structure followed by selling pressure on our lower time frame, it will be a beautiful opportunity to add more position to our existing trade. But if this does not happen and the $11,800 level continue to be a strong buying niche in this market, then we might likely see a situation this week where price action will break out of both of the trend line to incite another wave of bullish momentum. Now, if that is going to be the case here, then definitely we want to be seeing price action take out the $12,000 level. I have a key level here which I said I will be using as a yardstick for trading activity for this week. So I want to see price action climb above the $12,000 area, buy pressure around that area on my lower time frame for me to feel confident enough to join a bullish momentum from this current structure. So that is what we are going to be looking at to buy the US tech, and we are looking at somewhere right below the 11,800 to sell. Now we want to scale down to the 1 hour time frame. We want to see how price action has been reacting to this current structure since the beginning of this week. Now, in order to have a peep into that, we want to be scaling down to a much more lower time frame, like the 1 hour time frame, where we begin to see things more clearly. So right here on the 1 hour time frame, don't forget this is the 11,800 level which we identified on the 4 hours time frame, which has been a strong buying niche in this market. And look at what has been happening since the beginning of this week. Look at what happened. The week has started on a bullish note, as we saw our price started the week at the 11,850 level, making that area our new support line for this week. Now price action climbed up into the $12,100 level, which is serving as a resistance point for this week, and we saw a huge consolidation phase just within the 11,850 and the $12,100 area. Now it appears that we are beginning to see another buy pressure above that 11,800, which further emphasized the strength of the buyers at this particular point in time, and we might likely see a bullish momentum continuing to the upside. Now, I told you that I wouldn't be buying unless price action breaks out of the $12,000 level or the 12,100 area for me to join a bullish momentum at this point. And if price action breaches the 11,800, then we are going to be looking forward to selling opportunities in this market. Now, if we look at the current structure here and take into consideration the previous impulse leg, that is the last time price tested the major bearish trend line here, you will see that it appears that price action is transitioning into a reversal pattern in the form of an inverse head and shoulder pattern. This is the head, and then we have something like this, though it doesn't look perfectly like an head and shoulder pattern, but it looks more like a reversal pattern at this point. And you all know what we look out for whenever we have this kind of setup. We want to definitely identify a neckline area which will be our yardstick to confirm that this reversal pattern is valid. And the only thing that will make this reversal pattern valid is to see price action break out of the 12,100, retest of structure for a bullish momentum to happen in this market. So we shall be positioning ourselves right above that level, and in fact we have a buy stop order above the 12,100 level in anticipation of this move to the upside. Now we might want to be thinking of joining that bullish momentum early enough, since we are sitting right on a strong demand zone at 11,800. So we want to see buy pressure resume around this area, and then look out for structures that will support that a bullish momentum is coming in. Now to do that, we can scale down to a much lower time frame, let's say the 15 minutes or the 5 minutes time frame, to look out for structures. So this is the 15 minutes time frame here, and it appears we're having something like a reversal pattern around this area. And if we take this previous impulse leg into consideration and looking at the multiple rejection of the 11,850, it appears we have a reversal pattern gradually unfolding before our eyes. Now with that kind of structure here, we want to see a neckline area which we shall be using as a yardstick for trading activity, and that falls exactly at 11,920. And for the sake of clarity, let's identify that level, as we shall be using that area as a yardstick for buying opportunity for today. So now we have a situation here. We have a 15 minutes candle running where price action appear to have broken out of that structure. So if you had missed that, we want to see price action find some buy pressure, probably do a retest of structure in order to join that bullish momentum to the upside. So that is how we are going to be buying, so we can actually join that bullish momentum early enough, even before the breakout of the $12,100 level happens. So let's be on standby to catch this move, or you can actually join right away and have your stop loss just somewhere right up below the 11,850 to mitigate against any risk to your portfolio. And if price action continues further to the upside, breaking out of structures like the 12,000, 12,100, these areas will definitely welcome additional position to our US tech. I hope I made myself clear, and if you do have questions, feel free to drop your inquiries in the comment section. So I will be taking the next 10 to 15 seconds to read through the charts before I move on to the next pair. So let's see if there are any questions for me in the comment section, and if there are none, we'll just move on to the next pair. All right. Okay. All right, so in the absence of no questions, I want to assume that we're on the same page here, so I will be moving on to the next pair. So the next pair we shall be looking at is the GBPUSD. And remember, last week too, we were quite profitable on the GBPUSD, as we were able to take advantage of the first phase of last week started with a bearish momentum. Remember, as we saw price action started last week's trading session at around the 1.200 level. So this was where price started last week, and we were lucky enough to join this bearish engulfing candle into our TP target at the 1.18 area, and we are also lucky enough to join this bullish momentum after sighting a reversal pattern had that demand zone on our lower time frame to somewhere around here. So it was quite an even situation last week, as price closed the week at the area where it started the week. Now, if we take an outlook at the daily time frame here, it is quite obvious that price action has been bullish in this market. At least in the last 4 to 5 months now, it has been quite bullish on this chart. And to further emphasize the buying strength in this market, you can see what happened since the month of September, how price action continued to find higher lows here to give us that result and bullish trend line that you can see on your screen. And look at what happened. The bullish momentum continued, and as soon as it got into the 1.24500 level, that was in the month of December rather, we saw this rejection by the sellers around that area to negate all attempt by the buyers. Price action dropped back into that demand zone, which also shares a beautiful confluence with that bullish trend line. We saw another bullish momentum started this year at around the 1.18500. This was exactly where price started this year, as you can see, just right above that strong demand zone at the 1.18500 level. And as soon as price came back into the 1.2500, we saw another sell pressure resume, and it was at this point we saw the breakdown of that bullish trend line, which happens to be the first time the bullish trend line will be broken in the last 5 months. And this was a beautiful signal for us to sell, and we were lucky enough to be part of that sell momentum. And what you will notice here is that in the last couple of weeks, price action appeared to have come back into that demand zone within the 1.18500 and the 1.200 area. So this area has been majorly a strong demand zone in the last 4 months, I guess. Okay, 4 months now, that area has been a strong demand zone, and buyers had continued to hold their ground around that area, negating all attempt by the sellers to break down that structure. And in fact, when you look at the structure critically more further, you will see that following the impulsive move to the upside, it appears that after the sell pressure resumed around the 1.24500 level, we have a technical structure here that looks more like a reversal pattern in the form of a double top structure. And with this kind of double top structure, the demand zone here happens to be the neckline of that reversal pattern, and the only way this reversal pattern will be mature is for us to see price action do a breakdown of that demand zone to push price to the downside. And not only if a breakdown of that 1.185 happens, only then can we be comfortable selling the GBPUSD in the future. But if this does not happen and price action continue to stay right above that strong demand zone, we will have no choice than to continue to think of buying opportunity. Now, looking at what has been happening here throughout the month of February, we can see that price has been bearish, finding lower highs. And to emphasize this, we have this bearish trend line figured out here. So I connected the bearish trend line here, and look at what we have here. This is exactly where price closed last week, just right above the 1.200 level, which also shares a beautiful confluence with our trend line. So the buy pressure we have been witnessing around the 1.1800 level could become very valid if a breakout of that neck trend line happens, and that will be a signal that the trend line may no longer have the capacity to continue to hold that selling pressure. And this level also shares a beautiful confluence with the 1.200 level. So with a breakout of the structure, buying pressure above this level will definitely be a signal that we might be going bullish on this one. So in order to have a better perspective into what is really going on here, we need to scale down to a much more lower time frame to see how participants in this market has been reacting to this current structure to decide if we are going to be buying the GBPUSD for today, or probably price will be respecting that trend line one more time in such a way that price breaks back down below the 1.200 level to incite a breakdown of the 1.18 level, which will likely be the first time it will have happened in month. So in order to have a better perspective here, let's scale down to our lower time frame to see how participants in this market has been reacting to the 1.200 level, which I said also shares a confluence with that bearish trend line. So now if we scale down to, let's say, the 4 hours time frame first of all, before we go into a much more lower time frame, this is what I was able to identify on the 4 hours time frame. Now if I zoom out into the structure here since the beginning of the month of February, so this is where the month of February started, you will see that it has been a bearish tone in this market. And to further emphasize the strength of the sellers in this market, we can see how price action transitioned into a descending channel. You can see after connecting the series of lower highs and lower lows, I have this bearish and this descending channel figured out. And with the situation of things right now, looking at how price action, the bullish momentum started last week from that demand zone here, we can see that price is currently trading right around the resistant line of that descending channel. Remember, this is the resistant line of descending channel, so this is where price is. And if it happens that we start seeing some reversal pattern around this area, we will have no choice than to look out for selling opportunities, as price might likely be respecting that resistant line one more time, as it has always been doing throughout the month of February, to send price crashing to the downside. But if the breakout of that resistant line happens and we start seeing buy pressure above that structure, we shall be getting ready to join another wave of bullish momentum. So in order to have a better perspective into what is really going on here, we want to be scaling down into the 1 hour time frame. Now on the 1 hour time frame, this is what I was able to see since the beginning of the week. So this is what we have here at the beginning of the week. We have a situation here where price action has started the week on a bullish note. Price is trading above the 1.200 level. Remember that important key structure we identified on the higher time frame. Now look at how the week started here. It started on a bullish note as we saw this engulfing bullish candle. Price started at around the 1.20350. We saw this first engulfing candle. We saw the first resistant line for the week at the 1.21050 level, where we saw selling pressure, which appeared to be a retracement phase of this impulsive move to the upside. Then we saw another bullish momentum here, closing in with an engulfing bullish candle again, which finally broke out of that resistant line at the 1.2050 level. Now with the breakout of that resistant line, this is a beautiful sign that we might be going bullish on this one. And to further buttress the possibilities of a bullish momentum here, I have this trend line which was initially rejecting bullish attempt during the course of last week, and not until on Friday last week we saw price action break above that trend line, showing a confluence with the 1.200 level, and since then price action has been trading above that trend line. So now with the situation of things now following the breakout of that resistance line at the 1.21050 level, might likely be seeing this as a retracement of this impulse leg that started this week. So a retracement back into structure. Price is currently trading along that trend line I identified earlier. So I want to be seeing some buy pressure around this area, probably like a reversal pattern, double bottom structure, head and shoulder pattern, whatever reversal pattern you can think of the market transitions into on our lower time frame. Then you look out for breakout retest of structure, then we can join that trend continuation to the upside. But if you feel you don't know how to identify a reversal pattern around that area, well, you could just have your buy stop orders sitting above the 1.21050 level in anticipation of another wave of bullish momentum to the upside. Now, if the bullish momentum here continues in such a way that price find higher highs, then a breakout of the 1.22100 level, another key level here in this market, will definitely welcome additional position in this market. So these are the things we are looking out for to buy the GBPUSD today. So we already have two structures. One is this trend line. So as long as price remain above both the bullish trend line here and the 1.21050 level, we continue to feel comfortable in our buy position. However, if it so happens that the trend line is breached to the downside, then definitely this might lead to a signal that a momentum shift is gradually coming in. And what do we want to be doing to join that decline to the downside? In this kind of situation, considering the bullish momentum that we have been witnessing since the later part of last week, we are not going to be having a sell stop order at this point, as we need further confirmation to join that decline to the downside. So if a breakdown of both the trend line here happens, or probably leading to the breakdown of the 1.20350 level happens, we already have a bearish signal, but we are not getting too excited at this point, as we need further confirmation to happen, which is likely going to come in the form of a retest of structure. Can be this 1.20350, 1.2050 level, or even the bullish trend line here. But the most important thing we want to be looking out for is a selling pressure below the structures to incite another wave of bearish momentum to the downside. And not until we start seeing selling pressure after the breakdown of that bullish trend line, not until that we are not going to be selling. So once we see this kind of situation, we can place our sell stop order below the structures here to catch that move to the downside. And if a further breakdown of the 1.200 level happens, remember that very important key level we identified on the daily time frame, we definitely want to be adding more position to our existing trade. So this is how we are going to be looking forward to buy or sell the GBPUSD for today. So I have told you to guide our bullish momentum, or to guide our trading activity for today, we have this important trend line here to guide our trading activity, as if price remains above that structure, we shall feel comfortable in our buy position. And if that trend line is breached to the downside, then definitely we want to be anticipating a selling opportunity in this market. If you have any questions, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair, and I'll be checking the comment section from time to time to see if there are any questions for me regarding what we have been talking about so far for today. So the next pair we are going to be looking at this morning is the XAUUSD. The XAUUSD was one of the most profitable trade for us last week, as we were able to ride this bullish momentum all the way up into our TP target above around the 1,860. Now let's quickly take a fresh new perspective into this market so that we can prepare ourselves ahead of the New York session. So the first thing we can do here is just to scale up into the daily time frame, and let's quickly look at what has really been going on in this market. Now, if you look at the current structure in the market, that is, if you go to as far back as the month of September, you will see that price action has been very bullish on the XAUUSD. People have been buying the gold against the dollar, and look at what we have here to further emphasize that. We have trend lines. We have a temporary bullish trend line here, which is the lighter one, and I have a major bullish trend line here, which is the major bullish trend line that you can see on your screen right now. Now you can see consistently price action has continued to respect both this bullish trend line, and I would like to show you what happened at the beginning of the year, as this is one of the key structures that we want to be using to guide trading activity for today. Now look at the $1,820 level stroke the 1,800, this zone right here. Throughout the second half of last year, this zone was a strong selling niche in this market, where participants felt it good enough to sell the XAUUSD. However, at the beginning of this year, we saw the breakout retest of the $1,820 level, and price action continued to climb to the upside, breaking out of structures like the 1,860, the 1,900, and culminated at the 1,950, where we started seeing another wave of bearish momentum begin in this market. And we were actually lucky enough to be part of the sell momentum as we rode the move all the way down. And look at what we have here in the last 4 weeks in this market. Price is back into that structure where it started this year. And if we take a closer look at that structure, you can see how it shares a confluence with the trend line, that bullish trend line we identified earlier. And there is one more thing about this structure that makes it more interesting and viable to trade. Now, if you take into consideration the impulsive move here to the downside, price coming back to test that bullish trend line at around the 1,800 and the 1,820 level, where price action started this year. And remember also, this is where selling pressure has been during the second half of last year. Now we saw the first touch, price action climb back into that key structure at the 1,860. We saw the second touch here, price dropped back into the trend line, but was unable to break the previous low. And when you have a previous low not broken, that is a sign that bullish momentum is gradually coming in. And what did we see afterwards? We saw price action climb back up into the 1,860, and it was at this point we had the end of last week's trading session. And what do you see on the chart right now? You see something like a reversal pattern in the form of a double bottom structure. And whenever we have a reversal pattern like this, the next thing we want to be doing is to identify a neckline area, which we shall be using to guide trading activity going forward. And coincidentally here, the neckline of this reversal pattern falls exactly at the 1,860 level. And what do we have here? For this neckline to be mature and valid is a breakout of that structure, which appeared to have happened at this particular point in time. So we are going to be seeing probably something like a retest of structure in the nearest future to incite another wave of bullish momentum to the upside. So for this week, things are looking more bullish on the XAUUSD, and we will continue to use the 1,860 as our yardstick for trading activity. So what this simply means is that if price action remains above the 1,860, we shall feel comfortable in our buy position. But if anything happened during the week and price action drops to the downside, breaking down the bullish trend line here with selling pressure, then definitely we will have no choice than to join that decline to the downside. So I always try to make sure that we are open-minded whenever we are making our decision, so that whenever price action swings to the other way, we are always ready to be part of that move. So that is why I always try to identify the possibilities of a contrary to what we are talking about here. So now, with the information we have gathered here on the daily time frame, it is quite appropriate that we scale down to a much more lower time frame to see how we could actually take advantage of this trading opportunity, and at the same time see how participants in this market are currently reacting to the current structure we have right now. And in order to do this, we want to be scaling down to a much more lower time frame, and I'm going to be looking at the 4 hours time frame first of all, which is where I was able to identify a setup which I think we can use to guide trading activity for this week. And I think this is what I was able to see here on the 4 hours time frame. And if you look at the current chart here, you will see how strong the sellers have been in the market throughout the month of February. So price action started the month of February at around the 1960 level, another key level there. And when we connected the series of lower highs and lower lows, we have a beautiful ascending channel where price action has consistently respected. Now, with the situation of things last week, we saw how price has finally broken out of the resistant line of that descending channel, which is a beautiful signal that we are going bullish on this one, and we might likely wait for a retest of structure to happen to incite another wave of bullish momentum to the upside. Now, this is the reversal pattern we identified on the daily time frame. This is the first touch. We saw price action drop into the 1800. We saw this. Price was unable to break the previous low. Then we have our neckline area sitting at the 1860, and boom, we already have a breakout of the neckline area. So if anyone had missed the breakout of this neckline, then we can still be patient enough for probably a retracement back into structure. Remember, price action broke out of the neckline area at the 1860 and also broke out a key structure at the resistant line of that descending channel. And you all know from a technical standpoint, whenever we do have a breakout of structure like this, we expect that one point in time price is likely going to come back to do a retest of structure in anticipation of a trend continuation. So with the information we have here, let's scale back down to the 1 hour time frame and let's see how participants in this market has been reacting to this current structure in order to decide what our next line of action will be. Now, scaling down to the 1 hour time frame, we have the situation here. This is the 1 hour time frame here. So let's quickly dive into the current structure and see how participants in this market has actually been reacting to the price structure around the 1860. So since the beginning of the week, the week has started on a bullish note here. As you can see, we saw buy pressure resume around the 1869. And then that's making that area our support line for the week. Then we have the resistant line of the week at the 1895. And as you can see here, since the beginning of the week, we have been seeing selling pressure from that area. And in the last couple of hours also, we saw another sharp rejection of the 1895 level, which has been negating all attempt by the buyers to break out of that structure. And this is more or less like a sign. This is more or less a sign that sellers are very strong at this particular point in time. So we need to be very, very careful not to jump into any position right now. And you all know what we look out for whenever we have this kind of channel like this. All we want to be doing right now is to remain patient and wait out for our signal to happen before we want to be joining any trading opportunity. Now, what we are going to be looking forward to here is either a breakout of structure to give us an opportunity to buy, or a breakdown of the structure to give us an opportunity to sell. So this is what we are going to be looking at. So let's use the 1869 below the structure as a yardstick for selling opportunities, and above the 1895 as an opportunity to buy, as we want to see price action take out all the sell positions here, give us some liquidity around that area in the form of buy pressure, like multiple rejection of the 1895 or the 1887 area in anticipation of another wave of bullish momentum in this market. So this is what we are going to be looking forward to for today on the XAUUSD. Then there is one thing I would like to share with you around this current structure, and it is regarding this selling opportunity in this market. That is, if price action breaks down to 1869. Now, instead of having a sell stop order just right below the 1869 to join that decline to the downside, I will be advising you to remain patient after the breakdown of that 1869. And the reason why I want us to be very patient here is because of this trend line here, which I identified this morning. It has been rejecting bullish attempts initially before we saw the breakout of that structure here on Friday. And since the breakout of the structure on Friday, price has been finding higher highs, and there is a likelihood that price could come back to retest that trend line to incite the second wave of this bullish momentum. So because of this possibility that could happen here, I'm advising that we hold on a second. As soon as price break down the support line here, we need some further confirmations, which is likely going to be coming in the form of a retest of structure. We want to see selling pressure below the 1,869 or the trend line area. Look out for retest of structure in your lower time frame, after which you want to be having your sell stop order below the 1,860 to join that decline to the downside. And if a further breakdown of the 1,830 happens, we want to be adding more position to our existing trade. So these are my views here on the XAUUSD, but I am tending towards a bullish momentum anyways. Remember, we have a buy stop order above the 1,895 with the hopes that price will be finding higher highs. If you have questions, feel free to drop your inquiries in the comment section, and I'm willing to be of help in that regard. Another profit day, I see you. You want me to revisit the USOil? All right, don't worry. Yeah, I'm going to be doing a recap of what we talked about, so stay tuned in. Okay. All right, so in the absence of no questions, I guess I would have to call it a day at this point. I have to call it a day at this point, I guess. I was thinking I'll be able to take the USDJPY. Okay. All right, let's look. Okay, let's look at the USDJPY, then I call it a day. All right, let's run through that. So on the USDJPY, last week was quite choppy for us on the USDJPY, as though we had some positive experience on the USDJPY last week, as we made some profit anyways. And if we look at the structure on the daily time frame here, well, there is not much to say here on the daily time frame. If you had been part of us, you would realize how much I emphasize on the fact that price action has been bearish since the month of October last year, and to further emphasize that we connected a series of lower highs here, which gave us this bearish trend line. And during the course of last month, I think a couple of weeks ago, we finally saw the breakout of that trend line, which was a beautiful signal that price action that bearish trend line is no longer strong enough to hold that bearish momentum. Now, you all know what we look out for whenever we see a breakout of a structure like this from a technical standpoint. We expect that one point in time price is likely going to come back and do a retest of that structure, and it appears that is gradually happening right now, but we don't know if it's going to be a retest of structure or it's going to be a breakthrough of structure. So we want to see how this momentum is going to play out. If it turns out to be a retest of structure, then definitely we want to be seeing some buy pressure around this area on our lower time frame, where price action will be gradually reversing into a reversal pattern to incite another wave of bullish momentum. So it's very important on the USDJPY. We want to be very, very careful here, as we want to see if a retest of the trend line is going to be happening or a breakthrough of the trend line is going to be happening. Now, look at how price action had played out since the beginning of this week. We can see price action closed around the 135.00 level during the course of last week's trading session, and seeing a breakdown of the 135.00 level is more or less a sign that we might be seeing a sell momentum in this market. Look at what has been happening in this market since December last year. We saw the significant breakdown of the 135, and since then price action has been trading below that 135.00 area to further emphasize the strength of the sellers in this particular market. Though a couple of weeks ago we saw the breakout of that structure, which also still falls within the range where sellers were still very strong in the past. So price action dropping back below the 135.00 level still looks very, very bearish to me. And if you take into consideration the long-term bearish momentum in this market, we want to be very, very careful. So we could still have a situation where, since the breakdown of the 135.00 level happens here, we might likely see price retest the 135 to incite another bearish momentum to the downside. So we want to be very careful here. Two things could happen. We could have price retest structure, buying pressure to jump to the upside, or we could have a situation where price will just retest the 135.00 level to incite another wave to the downside. So the only way we can catch this opportunity, the only way things can become clearer for us around this area, is to scale down to a much more lower time frame to decipher what is really going on in the market. And in order to do this, I will first of all scale down to the 4 hours time frame, where I want us to look at things from a analytic point of view, really. And if we look at the structure here on the 4 hours time frame, you'll see since the month of I think the second week of January here, you will see our price action has actually been bullish, and in fact it went further to form an ascending channel, which is a strong signal that buyers are still strong in this market, as you can see here. Now if I zoom into the current structure, that is what has been happening in this market since the month of February, this is what we can see here. Hold on a second, let me extend this out a little bit so that we can see things more clearly here. All right, I'll extend this. So we have the 134.00 level here. Now look at this what happened during the I think the last week of month of February. We saw selling pressure. Price was unable to break the resistance line of that ascending channel, leading to a situation where price action transitioned into something that looks like a reversal pattern. And with the reversal pattern here, price action broke down the neckline of that reversal pattern at the 135.800 level. Remember, the 135.800 was quite a strong demand zone, which lasted for about 2 weeks thereabouts before we finally saw the breakdown happen last week. And you all know, from a technical standpoint, we could have a situation where price will come back to do a retest of that structure in anticipation of another wave of bullish bearish momentum to the downside. So this is what I was trying to explain to you on the daily time frame. So we need to be careful around this current structure, as the breakdown of the 134.00 level could turn out to be a false breakdown. And as you can see here, since the beginning of this week, we have been seeing sharp rejection of this level. This candle is yet to close, so we can't say this is a breakdown of a significant structure here. It could turn out to be a hammer candle, bringing price back above the trend line. And one important thing about the 134.00 level is the fact that it also shares a beautiful confluence with the support line of that ascending channel. So the question for this week on the USDJPY is that, will price respect this support line to incite another wave of bullish momentum to the upside, or are we going to be having a breakdown of that neck of that support line, which also shares a confluence with the 134.00 level, to incite another wave of bearish momentum? So the 134.00 level is the key level that we shall be using to guide trading activity for this week. So let's scale down to the 1 hour time frame. Let's see how price action has been reacting to the structure since the beginning of this week. Now look at how the week started here. The week has started on a bearish note. As you can see, price started at around the 135.00 level, 135.100 level, sorry, and then we have the support line initially for the week at the 135.600 area. So there was a little consolidation phase within which lasted about 12 hours, and what we saw here on the 1 hour time frame is a breakdown of the 135.600, and at this point I must have had my position triggered here, as I had a sell stop order below the 135.600. Now with the situation of things right now, we have a sell position running, so let's quickly run through that quickly, and we should be having our stop loss somewhere right above or close to the 135.00 level, which will be giving us about 100 pip stop loss, and let's hope that price action will move significantly well to the downside. And to further support this momentum here, I have this bearish trend line figured out. So it has been quite bearish since the beginning of this week. So after connecting the series of lower highs, I have this bearish trend line figured out at this point. Now this bearish trend line will be our yardstick. Coupled with the current structure we have here, the bearish trend line will be our yardstick for trading activity for today. So I will be sharing with you how we want to be using it. Now if price action continues to stay within the ambit of this bearish trend line, that is, stays below the trend line, we shall feel comfortable in the sell position we are in right now. So if it happens that price action comes back to do a retest of structure, selling pressure on our lower time frame, we might want to be adding more position again at the breakdown of the 135.600 to the downside. So with the current situation here, and with the fact that price action has broken down the support line for this week at the 135.600, we shall be holding on to a bearish bias on the USDJPY. However, in as much as we look out for selling opportunities in this market, we cannot ignore that the buying potential could come in. Remember what I showed you on the 4 hours time frame, that we are sitting right on a support line of an ascending channel where anything could actually happen from this current structure. And if a reversal pattern evolves from the support line of this ascending channel, definitely we might be getting ready to buy. Now, if we are going to be buying the USDJPY, what do we want to be seeing in this market? Well, I want to see the trend line breach to the upside. That is, the bearish trend line is breached, taking us out of our buy position, of our sell position. Then at this point, we might likely be seeing a momentum shift. Then if it so happens that price action comes back to do a retest of structure, that is the 134.00 level, which I said share the confluence with the support line of the ascending channel we identified on the 1 hour time frame. By pressure above that structure, it will be a beautiful opportunity to join a rally to the upside. Then a further breakout of the 135.100 level will be welcoming additional position to our existing trade. Now, talking about the buy position here, there is a catch to this current structure, and that is the demand zone we identified at the 135.800 level. Remember, this level has been a strong demand zone, a very key structure there. We saw the breakdown of that structure on Friday to breach that demand zone here, and you all know that there is a likelihood that price action may come back to do a retest of that structure to incite another wave to the downside. So why I'm explaining this to you is that if the bullish momentum continues to the upside, breaking out of the structure, as soon as price gets into an area around the 135.800 level, you want to be moving your stop loss accordingly to secure your current buy position, as we want to wait out and see how price action will be reacting to the 135.800 level to decide if we are going to be adding more position to our buy position or probably getting ready to join a decline to the downside. So if a breakout of the 135.800 with buy pressure above that level happens, we might be seeing price action come back to its previous demand zone, which will be a platform for another wave of bullish momentum. But if price action rejects that level, then we might be seeing this as a retest of structure in anticipation of another wave of bearish momentum to the downside. But I doubt if that bullish momentum will happen, because I'm looking at a breakdown of the 135.600 as a selling signal for me. But if it does happen, we want to be on standby to catch that trade. So that is that on the USDJPY for today. If you have questions, feel free to drop your inquiries in the comment section, and I will be running through the instruments we have talked about today in a moment. So let's jump in and start with the US oil. So on the US oil this morning, I told you how I was in a sell position on this one. And for those who are part of me with the sell position at the breakdown of the $76.50 level, I have told you that you should be moving your stop loss to somewhere right around the $76 area to secure this current position as we continue to monitor price action. Remember, we had the breakout of this channel to the downside, which was a signal that a bearish momentum is very likely in this market. But the fact that price action is currently rejecting the $75 area has a high tendency of giving us a bullish momentum, which I'm thinking will happen in the nearest future, as a breakout of the $77.20 area will be a significant structure for us to look out for buying opportunity. But I also stated here that are we going to be waiting for price action to come into this area, which is about 200 pips from the current structure, before joining that bullish momentum? And because of this, we scale down to a much more lower time frame, like the 15 minutes time frame, to identify a setup there. and this was what we saw on the 15 minutes time frame. We begin to see that price will continue to reject this level at the $75 area. And one thing I want us to be doing right now is to use the structure here at the $75.80 area to probably join a bullish momentum here. So this bullish momentum will only happen if price is unable, sorry, hold on a second. This bullish momentum will happen only if price is unable to break the previous low here at the $75 area. So please take note of this. So if this happens, breakout retest of the 75, let me label this for the sake of clarity, for the sake of those who are wanting to screenshot my screen for reference purposes. Okay, so we have the $75.70 level around that area. So if price action does not find breakdown the previous low here, this more likely transition into a reversal pattern that will be sent pricing crashing out of the ceiling at the $75.20 level. So let's be on standby to catch that, and best of luck on that one. Then we went on to talk about the US. Let me go back to the USOil. And I also stated that if price action breaks down the $75 area here to the downside, definitely we want to be adding more position to our existing trade. Now we moved on to the US tech for today, and on the US tech we already have a situation where price has been trading within a channel, and I showed you something on the 4 hours time frame where we identified the importance of the $11,800 level in terms of buying pressure, where price has been sellers were unable to break down the structure in the last 1 month. So as long as price remain above the 11,800, we want to be looking forward to buy opportunity. But if a breakdown of the 11,800 level happens, then definitely we shall be looking forward to selling opportunities in this market. Now going back to the 1 hour time frame, and more or less the fact that price is still trading above the 11,800 level, we have no choice than to look out for buying opportunity. And one thing I stated here is that following this impulsive move to the downside, it appears that price action is transitioning into a reversal pattern in the form of a inverse head and shoulder pattern, where the 12,100 level will be the neckline of that reversal pattern. And I told you that a breakout retest of that structure will be welcoming a buy position in this market. Now there is one thing here, just like the US oil, I said here that are we going to be waiting for price to break out the structure before buying, or can we have the privilege of joining that bullish momentum even before it gets to this point so that we can maximize the profit we can make on the US tech? And in order to do this, considering the continued buy pressure around the 11,850, we scale down to a much lower time frame, like the 15 minutes time frame, to see if we can identify a reversal pattern around here so that we can join that bullish momentum early enough. And when we scale down to the lower time frame, that is the 15 minutes time frame, this is what we saw here. And you must have had your position triggered by now, as we saw the impulsive move to the downside. Price was unable to break the previous low. We started seeing buy pressure here. We have a neckline at 11,920. Breakout of the neckline area was a signal of a reversal pattern around that area. We are looking forward to buy pressure here to incite another wave of bullish momentum at this point. So if you are already joined already, ensure that your stop loss is somewhere right below the 11,850, which will be dovetailing to about how many pips that is. That's about 90 pips thereabout, and let's wait out and see how this is going to run out. Now I told you the importance of the 11,800, that if price action breaks down that structure, remember we have a sell stop order below that level to join that decline to the downside. So let's be on standby for these opportunities as price action plays out. Then we went on to talk about the GBPUSD, and on the GBPUSD we also had a flat channel here where I told you that price action trading along this trend line here we need to be very careful. We want to see reversal patterns along the trend line here to give us a confirmation of a trend continuation to the upside. And I told you that for those who are finding it difficult to find a reversal pattern around this area, you could just have your buy stop orders sitting above the 12,000 above the 1.21050 level in anticipation of a trend continuation to the upside. Then if a further breakout of the 1.22100 level happens, we want to be adding more position to our existing trade. Then I also said that if price action breaches the bullish trend line here, that this will be a sign that we might be going bearish to the downside. But I told us that we don't want to get too excited if price action breaks down the trend line. We want to remain patient and hold on for price action to give us some confirmation, which will likely come in the form of a retest of structure, selling pressure on our lower time frame. Then we could join that decline to the downside. Then a further breakdown of the 1.200 level happens, we will be adding more position to our existing trade. Then we went on to talk about the XAUUSD as well. And on the XAUUSD, we also had a channel here between the 1,895 and the 1,869. So we almost have a similar setup with what we have on the GBPUSD here. So we have a buy stop order right above the 1,895 to join the bullish momentum if that is going to be happening. Then breakdown of the 1,869, we are not joining right away. There is no sell stop order right there, as we need further confirmation for that to happen. So if price action drops below, we want to see some retest of structure, selling pressure below our on a lower time frame. Then you could have your sell stop order below the 1,860 to join that decline to the downside. And a further breakdown of the 1,830 will definitely welcome additional position on this one. Then we went on to close the day with the USDJPY, and on the USDJPY, I told you that I have my sell stop triggered here. And for those who are joining me along with that, let's hope that this momentum will continue to the downside. And I have told you that we are going to be using this bearish trend line as a yardstick for trading activity for today. So what this simply means is that if price action continues to stay below the trend line, just below the trend line, we shall feel comfortable in our sell position. So we have two structures guiding our sell momentum for today. We have the 135.600 and the bearish trend line. So as long as price remain below the structures, we shall feel comfortable in our sell position. However, if it so happens that price action takes us out of our sell position in such a way that it breaks out of the trend line, then at this point we are going to be expecting a momentum shifts. And if that will be happening, remember, we are not having a buy stop order. We want to see some confirmations to happen. Scale down to your lower time frame. Look out for retest of structure. It could be the retest of the 134.00 level. Remember, this level shares a beautiful confluence with the support line of the ascending channel we saw on the 4 hours time frame. So we want to see a retest of that structure. Buying pressure resume, then we want to be joining that rally to the upside. Then I also stated here that a further breakout of the 135.100 level will be welcoming additional position on the USDJPY. Then there is a catch to this current structure, that says if bullish momentum comes in at any point, I told you the importance of the 135.800 level, a level which has been a strong demand zone in the past, and it was broken on the last day of last week. So if the bullish momentum here continues in such a way that price continues to the upside, I told you that as soon as price gets into the 135.800 level, we want to be securing all the buy position we have prior to that moment, as we want to wait out and see how price action will be reacting to the 135.800 level to decide if we are going to be adding more position to our buy position, or we might be getting ready to join another wave of bearish momentum to the downside. So these are my views on the USDJPY, the XAUUSD, the GBPUSD, the US Tech, and the USOil. So we were able to successfully trade 5 financial instruments for today. So I hope we are well equipped with all the possible scenarios that could likely happen, and we can catch any of this opportunity when they finally happen. So it has been a wonderful moment with you guys, and once again, welcome to those who are joining us for the first time. I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we gather again here to review how well the pairs that we have been monitoring so far has been doing, and at the same time get prepared for the New York session tomorrow. And once again, I want to say I'm sorry for the late the delay in the live session this morning. It was due to technical issues which I explained earlier, but things have been sorted out now, and I hope that we are going to be starting right on time tomorrow as usual. So do have a wonderful evening, everyone, and best of luck to you in the house. I see your comment, my Gigi. I saw your comment earlier, but I can't find it anymore. I trust you are doing well and glad to have you around. So have a wonderful evening, everyone. Bye bye.